welcome to another episode of Ask Mortgage Mike, where I take topics and questions regarding the mortgage industry and try to answer them for you and educate you, the viewer, on those topics to make the home buying or home refinance processing a little easier. Today, you can see we're going to discuss income qualification. Income qualification, you can see there is 10 specific items, and then I've got my catch-all down at the bottom, 11 for other, because there are hundreds of different sources of income. Today we're going to try to cover some of the main topics. So today we're going to talk about W-2 full-time income. W-2 full-time income, that is what we like to say, the vanilla client, right? There's no caveats, it's just all straight W-2 income. You have a salary, you're not worried about paid anything else. Pretty much the easiest source of income when you're going through the mortgage process. Part-time income. Part-time income is tricky. If you work two jobs, so you have a full-time job and a part-time job, we're really only going to use the part-time job income if you have been on that job for 2 years or in that same field type. Again, there are exceptions to everything I'm going to tell you today, but I want to give you some general guidelines. So generally speaking, if you have a part-time job and you've had a part-time job for less than 2 years, that income cannot be used at all to qualify you for a home purchase. Overtime. Overtime income is the exact same way. Generally, we're going to want to see a 2-year history of overtime. We're going to take a 2-year average of that overtime, and we're going to have to do what's called a verification of employment, where we're going to send a piece of paper to the human resources, and they're going to also have to specify that the overtime is likely to continue. Firefighters, EMTs are generally a lot of the people that are guaranteed overtime, if you will. Nurses, things like that, where you're guaranteed a set schedule, you're going to get overtime, is where that happens. But if you're a normal worker and it's seasonal and you get XYZ overtime, we're going to take a look at the overtime income. The overtime income is going to be calculated on a 2-year history, but we're going to use a year-to-date average or a 2-year average, whichever is less. Meaning that if you made $50,000 in overtime last year and you've only made $10,000 year to date, we're only going to give you credit for $10,000 year to date. So again, that's kind of how the overtime rules work. Bonus is the exact same way as overtime. We're going to want to see a 2-year history of it, and we're going to want to have a letter from HR that specifically states that this bonus is guaranteed, or that it's likely to continue, is the exact verbiage that they use. So again, we need to see a 2-year history of it. My wife works for a company. She gets an annual bonus every year. It's not guaranteed, but it is likely to continue. We take a 2-year history of that, and that's how we come up with what the bonus income is for the year. Commissions. People in commission jobs, we want to see a 2-year history minimum of commission jobs. Ideally, we want to see a 2-year history of the same industry, meaning I've been in the mortgage industry for 11 years, that covers me. But if I were to switch to the car industry next year and I wanted to buy a house next year, I would have a hard time convincing an underwriter that my previous commission job selling mortgages was going to reap the same benefits as selling cars. So we generally want to see a 2-year history of the commissions, and in a perfect world, we want to see them in the same industry as the same in order to calculate or use the commission income. Self-employed, whole nother ballgame. You've got your LLCs, you got your sole proprietorships. You've got, there's just literally hundreds of different types of businesses. Self-employed clients, we're going to want to see a minimum of 2-year history on your tax returns. We're going to do a calculation based on the adjusted gross income, your depreciation, things like that get added back in, and you pay to the officers. If you're one of the officers, that can be used as income. So really on a self-employed borrower, we're going to want to see a 2-year history on tax returns. And generally, this late in the year, we'd want to see a P&L also. So once you get past, like April or May, we're going to want to see a year-to-date P&L also to count income for the year. The way that self-employed works is it is a 2-year average worst-case scenario. So if last year you made $100,000 self-employed, and this year you made $50,000, we're only going to give you credit for $50,000 in annual income. This is every lender in the country, unless you find a hard money lender that's got a special program with 1 year self-employed. Freddie Mac will generally allow sometimes only 1 year tax returns, but for the most part, again, there caveats to all of these. For the most part, we want to see a 2-year history. Now then, the other way that it works is if you did $50,000 last year and $100,000 this year self-employed, we're going to take a 2-year average and give you $75,000 a year in income to qualify on. So we take the worst case scenario when we look at self-employed. If this year was more than last year, we're going to take a 2-year average. If this year was less than last year, we're going to use this year only. Social Security income. The way Social Security income works and any pension income is if you don't pay taxes on that money, we gross it up. So say your Social Security check is $1,000 a month. We get to gross that up because when you qualify for a mortgage, it's based on gross income. So we're going to take that and multiply by 1.25%. Should give us about $1,250 a month in income to qualify on. Social Security or any pension income that you receive that is not taxed, we get to gross it up. That's with any income that you receive that is pre-tax or post-tax dollars. You don't pay taxes on. Rental income. If you have a lease and you're getting $2,000 a month on that lease, but on your federal taxes you only claim $500 a month in rent, we're only going to use $500 a month in rent to qualify you on. What you show for rental income on your taxes are what we're going to use to qualify you for the to count that as income. Again, some caveats to that, but generally speaking, that's how that's going to work. Child support and alimony, unless they're court ordered and we can document a history, we're not going to use them. So because your ex-wife or ex-husband is giving you $300 cash when they have the money, unless it's court ordered and we can document that they're up to date and that they're paying it on time, we're not going to be able to use any of that money for income. So again, strongly recommend that you get that sourced, and I would strongly recommend that you get a check written to you and that you deposit that check into the account. Military income, BAH, BAS, those are money for food and money for living expenses. You're also going to get your hazard pay, flight pay, any of those things that that you get while overseas. Those can all be used to qualify for income. So we use any and all of those things for our military and for our vets. Other income, as I mentioned at the beginning, there are hundreds and hundreds and hundreds of types of different income. Hopefully this answered some questions on some of the more specific, more commonly used income sources. But again, thumbs up if you liked the video, subscribe to the channel, and I look forward to bringing you more relevant content. But I hope everyone has a great week. Thank you for watching.